What's going on, everybody? You are listening to the Co-Living Show. My name is Craig Curlop,
Miller McSwain.
and we've got quite the episode for you today. We're switching it up a little bit. We're kind of not talking about co-living that much, which is crazy because we're called the Co-Living Show, but we keep you on your toes.
Yeah, but it's still totally relevant. Today we're talking about acquisition strategies and how typically we're talking about going on market, buying these houses that are pretty much set up and you go in and make some tweaks. But today we're talking about going off market where you can get some deeper discounts, juice your returns a little bit more. And then after you buy it, you can do whatever you want, right? So I think it's still totally co-living related. You could buy off market, you could buy on market, whatever. We're doing co-living at the end of the day. So that's what we're going to talk to you guys about.
Yep. And I think the co-living returns are really good for being on market. But if you're going to do that BRRRR strategy, which is basically just a BRRRR with a co-living in there, that now you really do want to get some deals that are off market, that you're buying them below value, all that kind of stuff.
Yeah, so I mean, co-living is getting more and more competitive. There's different ways that people are going to find to stand out. Personally, for me and Craig in our business, the way we're standing out is a lot on the operations side. We're doing a lot of community things that we talk about and really good marketing and things like that. But another way to differentiate and get cash flow when the space does get more heated up is to also buy deeper, buy more creatively, do all of that. So it's just like another take on how to be the best at co-living. This is just another way to get into that.
Yep. And in the event that for some reason, we hope that all of you guys will do co-living forever, but let's be real. Some of you guys will be in co-living for now, and then we'll want to transition it to maybe long-term rent and all that. It wouldn't be bad to make sure that your worst case scenario means it cash flows as a long-term rental, and then you juice the returns for co-living, and then you can always kind of transition it back and forth. I've actually got a couple properties that I have gone back and forth a couple times from co-living to long-term rent. So it's definitely super beneficial. Okay, before we get into this episode, we've got to look at our group and field a question. This week's question is from Priscilla Marie. She says, "Hey everyone, I'm new to the group and just closed on my first co-living property in Visalia, California. I've never heard of this place. She's been investing since 2012, did an MTR in 2023, and it's been 93% occupied. However, there's been a decline in the whole house rental and more demand for one bedroom and shared spaces, which we've heard a lot of in the MTR space. So pivoted a property that hits all qualities for co-living. She wants to launch this one, but she's a bit conflicted. Does she provide all the rooms as fully furnished, as almost like an MTR by the room type thing? Or, I guess, or not. The unit is a 4-bed, 2-bath. She converted it to a 6-bed, 2-bath and would probably want to add another bath later." Okay.
Gotcha.
That's an interesting situation. Cool. What do you think, Miller?
All right. So basically, question is, should you furnish your rooms? Should you not? If this is your first property in the market, then you really don't have a ton of data to go off of. And there's not a ton of great data sources out there. Two that I can point to, you can go to Pad Split and sign up as a host, even if you don't follow through with the whole process. That gives you access to some data, and they're totally furnished. So you can kind of see how much demand there is for furnished rooms. That's one data source you could look at. But really, if you don't have anything already set up in the market, I would kind of take the path of least resistance and then pivot if you need to. So if the house is already unfurnished, great. I'd go ahead and furnish the living room, furnish the kitchen, furnish those shared spaces, leave the bedrooms unfurnished, and go ahead and market it and see how it goes. Great. If you find within 3 weeks you're not getting a lot of bites, all right, great. Now you can go furnish it, and you can spend the money on it at that point rather than doing it up front. But if it is already a midterm and your rooms are already furnished, then great. I'd probably leave them furnished, try that, and then unfurnish some of them if you need some wiggle room there to increase your performance. So start with the easiest method and then kind of improve it in a couple weeks or 3 weeks if you need to.
Yeah, I like Miller's approach of like test, and then go all in on what the test results are. And I think that's definitely the most pragmatic way to do it. I would say that if you've already got your system set up for fully furnished and you know how to rent out a fully furnished room, I would venture to guess that there's probably more unfurnished rooms than furnished rooms on the market. So you might have you might be fulfilling a demand that you don't already have. If you've already got those systems down and it's like almost easier to furnish it than to not furnish it, keep it simple and just furnish it. And if for some reason you can't get them filled, then you can always unfurnish it, or you just lower the price to the price of a furnished room and you charge the same price, but maybe they stay longer or they like it better.
Yeah, yeah, I think it's a good point. This is all just a supply and demand kind of question. Like whenever you look at that pad split data, you can infer, you can definitely see the amount of supply. You can see how many rooms there are, and then I think they have a metric on there that's like how quickly does it get filled up, so that could kind of indicate demand there. But just because you see that, whoa, the rooms fill up in 5 days, great. What if there's like 10,000 rooms, right? You could get your room filled up in one day if you're the only person with unfurnished rooms and there's a tenant or an applicant in the marketplace that already has furniture and that's the product they're looking for. So totally supply and demand based. And kind of just the easiest way to suss that out is to test it.
Yep. Guys, if you've got a lot of questions and you want them answered and you want them answered in a public way, like on this podcast, and get a call out, make sure you join the co-living community on Facebook. We got like, 1,000, 1,500 members. We're growing fast. And definitely it's one of those things where the more people that we get in, the more value that we can provide. So join the group, join the club, and let's get rocking and co-living. So with that being said, let's bring on Mr. Robbie Faith. Robbie Faith, welcome to the show, my friend. How you doing today, man?
Dude, thanks for having me. Really excited to have a conversation with you guys. I'm doing well.
Yeah, man, I'm super pumped to have a conversation with you as well. I know our buddy Ramon introduced us, and I've been super impressed about what you're putting together down there in New Mexico, right?
That's right. I'm in Albuquerque.
Albuquerque. And so we're going deep on acquisitions today because you're the guy. You're the wholesale guy. You know how to get and really build an off-market deal funnel. So why don't we just kind of get started about who you are right now, why you're on the show? Yeah, who are you?
Sure. So my name's Robbie Faith. I'm in beautiful Albuquerque, New Mexico, the land of enchantment is what we call it. Born and raised here. Had a deep interest for real estate for about 23 years or so. I've been in the business for 18. Started off as an investor. It just made financial sense for me to get licensed in 2009 as I had accumulated a couple properties rather than spending money investing in somebody else selling my property. I got my own license. And so byproduct of being an investor was that I started building a business around the brokerage aspect of real estate and have been building a team ever since. I've got a team here at Keller Williams Realty, and we service the greater Albuquerque area. In conjunction with that, we've got an investment business line that we generates many off-market opportunities for us to either buy and add to the portfolio, wholesale, seller finance acquisition, or disposition with seller finance. And many of them we end up lending on, so we get opportunities to lend on the deals that we wholesale. And if none of those options work, then we kick it to the retail team, and we'd love to be able to service that business for the seller, and we put it on the open market. So in a nutshell, I've got a brokerage, investment, and private money organization, almost a full ecosystem. For the goal is to build the entire ecosystem out so that we are one-stop shop for any consumer's need.
So to like make this clear, it's like your kind of funnel starts with your marketing. You're trying to find a property that needs to be sold, whether it's distressed or not distressed. And then you've got like this funnel that you put it through where it's first order of operation is like, can you buy it? Then maybe you wholesale it. Then maybe there's a couple other iterations. And at the bottom of that funnel is if they want highest and best and it's a nice house, you kick it over to your listing team. And then that's like the acquisition side, right? And then from that point of perspective, like you guys are also making money on the lending. You've got a lending arm. So someone needs a loan, you can help them finance that. Is it short-term financing?
Yeah, it's a bridge loan geared for a fix and flippers to just do a 6 to 12 month term typically.
Gotcha. So those are going to be on your investor side, but you don't have like 30-year fixed
We
option,
don't
right?
do like any traditional mortgage lending. In some cases, we will do longer term seller financing. So if we acquire a property and we're able to either buy something and acquire something with seller financing on the acquisition side, if we have a long enough time horizon with that seller, meaning it's a fully amortized opportunity from the seller where there's no balloon. In some cases, one of the exits may be that we go and resell it with seller financing and create the arbitrage and the interest rate from what we're getting and or price from the seller, and then what we go and resell it for. So in some cases we will go longer term, but it's not as frequent, but it's one of my favorite strategies.
Yeah, I think the seller financing piece is huge. And I think a lot of people want to get into that. Can you talk a little bit about, maybe run a certain example with some numbers as to like how a seller financing deal might work, like how you might approach it?
And like, when would you use seller finance? Because it's not always the right tool. So like, when is
Yeah.
it the right tool?
Yeah, exactly. Seller financing it's a phenomenal tool that we use when we're having an issue bridging the gap between what a seller wants and what we can pay on a cash deal. A lot of the wholesalers out there that don't have any creative finance background, it's like they're a one trick pony. They either buy it cash, it's got to fit inside that box that they create. And if they can't make those numbers work, the margin's not big enough, then they're not able to monetize an opportunity and ultimately create a win win and help a seller out, help them accomplish what they're setting out to do. So, what we do is we try to understand what the overall objective is from the seller. Do they need all of the money out of the transaction, or do they not have a place for the equity once it's closed? And so that's one of the questions that we ask. And we often find that if you ask that question, most people don't have a place for it. We invite them to become the bank. And it often allows us to be able to pay them a higher price so long as in turn trade and in trade for giving them the higher price, we get terms that allow us to cash flow. So we're very transparent about it. Got to be able to generate a reasonable return on investment in order for us to be interested in buying it, either on a cash transaction or if it's the price is more than, if they want more than we can pay on cash, then we can do a higher price, but the terms have to be attractive for us.
You said something interesting there. You will invite them to do seller financing. So it sounds like your perspective on seller financing is different. Tell me about
Sure.
that.
Yeah, truly, we're a professional operator, right? So we're not just like a run of the mill buyer who may be a higher risk profile for a seller where they may or may not have the ability to repay. We've got phenomenal history as a borrower on many multiple loans and seller finance deals. And we've got plenty of funding so that we can provide a down payment if that's necessary, if they want that. But in addition to that, we have cash reserve. We truly feel that we are probably the best borrower for the seller, which provides them a safeguard and security of knowing that they've got a professional operator that's actually operating this like a business. So we're building out all of the operating expenses. We're factoring in the management fees, the repairs and maintenance. We're underwriting for vacancy. We're forecasting the full thing so that we can generate a reasonable return for us after those expenses are paid. And so when we get pushback from sellers on why is this interest rate coming out to 2%? Here's how we arrive at that number. I told you from the very beginning that in order for us to make sense of buying it, we need to be able to generate a reasonable return. If we can't do it as a cash purchase because you want a higher price, then we need to make our money in cash flow. And here's the math. Here's what it comes out to be. We have a professional management company. We've got repairs and maintenance. So you know that we're putting money away to take care of the inevitable expenses that come up. We're going to cover taxes and insurance. So here's what's left over. This is our expected return on investment. Full transparency. This is where we need to be. And we just show them the math on it. And a lot of times we find that if you just run the numbers, sellers can be a little bit more receptive.
I love that. I love just kind of like opening the book. I think a lot of people try to play secretive, and and you're transacting someone's house. It's a big deal for them, a lot more bigger deal for them than it is for you. And what they
Yeah,
want,
exactly.
I'm guessing, is trust, and transparency is a way to build trust for sure.
Yeah, it's a core value from us. Like it's win-win or no deal, high integrity. We got to make sure it makes sense for them. And sometimes we'll try to talk sellers out of this. Like, why does this make sense for you to sell it? Why don't you just keep it? Truly, just getting down to the crux of why they are wanting to do this in the first place to solve a problem.
Mm-hmm. I think that's so important. Is like this is a relationship business, and even wholesaling. Like, there's a lot of wholesalers out there that are pretty sketchy, and it's like pretty easy to be a sketchy wholesaler. Which means if you're actually like like you've got integrity and you're a wholesaler, you're probably like in the 1%. So Robbie, congratulations. It sounds like you've made it to the 1%, but that's why you've had so much success, and like you've been able to sustain it as well.
Yeah. So if we could just take a step back. So in co-living, most people are buying their properties on market just because it is a high enough cash flow strategy to where if you do find the right house, you can get some cash flow. So like when co-living investors are thinking about what we're talking about here, seller finance and some of these like creative type strategies and getting properties off market, what's the reason that they should consider going off market? And are there any reasons that you'd be like, hey, you guys probably shouldn't go off market if it's this scenario?
Yeah, great question. Off market is, in my mind, it is the most opportunistic. We have the opportunity to negotiate directly with the seller. It allows us to take down the barriers that brokers often put up to protect the client, which is understandable, but in some cases they can be counterproductive. And when we can truly solve a problem direct with the seller, find out what their objective is, it just makes it, so much more efficient. So that's one reason, but the reality is we're doing this to make money. And so we're a for-profit business, and I'm looking to add net worth and cash flow to my portfolio. And that's the same reason I imagine you gentlemen are doing your amazing strategy. And so the benefit of going off market is typically when we can eliminate closing costs for a seller, including commissions and title fees, and we have the ability to pay cash and solve a problem and move quickly for a seller, it generally means that we can get a better price. So if we can enter a deal with immediate equity, it just makes the return so much more substantial. And that's the reason is we're looking for higher returns.
How do you balance the, hey, you're an agent, like you've got your license, you're a fiduciary, with we're getting a steal of a deal when maybe they could get more by
Yeah.
listing it?
Yeah, good question. Again, with integrity, we have these conversations. In some cases, we try to talk them out of it. And we'll say, look, your house is worth 300,000. The reality is for us to be interested in this property, hope you can understand, we're investors. Investors are seeking what? Return on investment. We have to be able to build in a reasonable profit margin. Does that make sense? I totally get it. It makes sense. It's 99% of the time that's the response. They understand that.
Mhm.
Okay, that being said, your house is worth 300,000. The roof needs to be replaced, flooring needs to be replaced, updated kitchen and bathrooms. There's something we're going to have to do, mechanicals, this and that. It's probably going to come out to potentially around this number. Plus, after we build in our profit margin, we're going to have to be at about 150,000, maybe 160 on this, and it would be a cash deal. We can close in 2.5 weeks. Is that something that would interest you? Yes, no, maybe. If it's a yes, fantastic. At least I did my due diligence and told them what the potential value is. Sometimes it's not enough. And so what we do is we give them multiple options. The other option is we can come in and you can do all these things and you can get this number. Or if you want to go on the open market, we could sell as is on the open market at maybe 225. But here's what to expect: inspections, appraisals, showings, potential renegotiation. So we just lay out like the full, play it full out for them, let them choose.
Yeah. So if someone is looking to juice their co-living returns like this, what sort of like prerequisites should they be thinking about? Most people are trained to go on market. So if we are going to go off market to juice returns, do we need, yeah, you mentioned like potentially all cash. Do we need all cash up front? Do we need big remodel experience? Kind of what do we need if we want to enter this off market space?
Yeah. The cash is not always a prerequisite. Whether or not it's your cash or somebody else's, if you find a deal, the money will come. There's lenders like me that would love to lend on a deal that somebody's buying for 150,000 that's worth 300. Why? Because I've got a margin of safety built in. I've got security knowing if this deal goes bad, like I take the property back and I'm happily will give someone the opportunity to make some money on it. So there's plenty of capital out there, even for new people nowadays, more so than I've ever seen. So you don't have to have your own cash. That's a misconception. I think that's where a lot of people go wrong. What you need to do is find a good deal. This is the hardest part of the entire cycle is finding a deal that makes financial sense. Most of the time, it's a lot of sifting. There was a period of my career where it was 100% all organic, broker referrals, or just cold outreach on my part when I was wearing every hat. Now I've got a team that does most of it for me. And so that is the reality is like it can take a lot of energy to find a good deal. The way to speed that up is you can pay for good deals. And you can do that by paying for marketing. And what I would tell anybody that asks, and this is something that is a question that comes up a lot, is if I'm willing to pay for speed to find better opportunities, how much money is it going to require for me, and how long do I need to do this until I can expect to get an opportunity? Most people just they don't have the financial wherewithal or the grit to stay with something long enough to see the fruits of the labor. We spend a lot of money every month on marketing, multiple five figures. And so it generates a lot of opportunities. That being said, I've got a team, I've got multiple acquisition specialists, so we have more people to feed. We can handle more capacity. If you're a one person show, there's places you can do PPC, you can do direct mail, you can hire a virtual assistant and compliantly through TCPA outreach to people, and that's the best way to do it. And here's what I train my agents to do, just to give you an idea. And I think this is a big shift in the way that we look at the marketplace. We've got 22 agents on our team right now. And so the reason we tracked agents, one of the reasons is we're a hybrid investor realtor team. But we lead with prospecting for investment opportunities. So every agent that comes on our team, we coach them on prospecting for investment leads. So what that looks like is if somebody's going to come here, if we're going to spend the time on the phone prospecting a funnel, prospecting a database, we may as well spend the energy looking for opportunities for you to be the actual buyer. So if we're circle prospecting a neighborhood where they're going to hold an open house, for instance, they call and they train them to have a conversation with the seller where they say, "Hey Bob, I'm holding a house open down the street over here at Main Street, 123 Main Street. I'm wanted to invite you to the open house. By the way, do you by chance have any interest in selling your home? I am a realtor, but I'm actually looking to buy an investment property. Is that something you would consider?" And the conversation is so much more intriguing and compelling in my experience for a seller when they're talking to an actual buyer versus one of the 5,000 realtors in their marketplace that's looking to get a listing.
Can you run us through what that? Can we do a quick role play and what that
Sure,
scenario
yeah.
might go? So yeah, let's say I'm the seller that you're calling.
Okay.
Hello.
Oh, hey, Craig, how are you doing? This is Robbie Faith. I'm holding a house open down the street. I'm over here on 123 Main Street. I noticed that you own the home. Do you own this home over here at 256 Main Street?
Yeah, yeah, I do.
Oh, fantastic. I just wanted to personally invite you to this house. I'm not sure if you've seen it, but it's a phenomenal home, and we're inviting all the neighbors over if they want to come check it out. And we're going to be there from 12 to 2 on Saturday. While I've got you, I hope you don't mind me asking. This may seem a little out of the blue, kind of a silly question to ask, but I'm actually looking to buy a property myself. The one that we're holding open, that doesn't fit the profile of what I'm looking for, but you've got a really nice home. Just Googled it. Are you by chance considering selling this home now or at some point in the future?
Maybe in the next few years, but yeah,
Okay.
I'm not quite sure on the timeline yet.
Okay. But within the next few years, is it fair to say you will definitely be selling?
We've talked about it. I don't want to say definite.
Okay. Do you mind me asking, what is the determining factor for you to sell, if you don't mind me asking that?
Our kids are grown, so maybe downsize a little bit. And
Uh,
so we got this house at a good time, good rate. It's tough to
uh,
downgrade and then pay more. So that's where we're at now.
yeah. So the house, it sounds like what you're saying is it might be too big for you right now.
Yeah. It's like we've got space that we're not using, but we've got such a good rate and the monthly payment is so good. It's like hard. You know what I'm saying? Like it's just
Hard,
hard
yeah.
to,
It's
it's
hard
hard to buy. Yeah.
to step away from that. Do you mind me asking what's your interest rate on that house?
Yeah. We're at like 2.75.
Incredible. Yeah. The truth is you've got an incredible opportunity there where you could potentially sell this home, and maybe it would make sense for you to sell it to somebody and offer the ability to finance them at a rate that might be a little bit higher so that you can generate some cash flow for
Mhm.
yourself, plus get a higher sales price and get some money as a down payment at time of closing. Maybe that makes sense for you, maybe it doesn't. But in either case, what's great about your situation, you've got options. It would probably be a good idea before you do anything just to explore all of those options, just to see what makes sense for you. So if it's okay with you, what I'd like to do is come check the house out, because maybe at some point I have a buyer for it whenever you're ready. But if nothing else, I'd love to educate you on what your options are.
Yeah.
When would you be available for it, and set the appointment?
Right. Cool. Yeah, I love that. I love that you leading with value is good. And then also asking the questions. And yeah, good stuff, man.
Yeah. And so I think the key here is that you're not appearing as a realtor. You're appearing as just everyday Joe Schmo in the neighborhood, mixing in with everybody else. Nothing special over here. And it kind of makes that when you get those cold calls that are pops right off and something like sounds a little bit off, you're able to kind of overcome that because of how personal you're approaching this scenario from.
And I genuinely want to help solve a problem. And a lot of times does not make sense for them to sell, and we're happy to tell them.
I also noticed like you've slowed down a little bit. Is that intentional when you're talking to them?
Yeah, I mean, typically we will mirror their speed at which they're communicating. That can be a good communication strategy in general. But yeah, I think so many people are getting inundated. I don't know about you guys, but my phone, since we've been on the call, 3 spam calls. Like we're all inundated with people trying to sell us stuff. And so like I really try to take the time to just be a human and connect with somebody and slow it down. In my mind, I could go much faster, but we gotta really slow it down because these topics can be a bit obscure for some people who haven't dealt with them. Just going slow helps with that.
Yeah. Robbie, are there any resources that you recommend for people to get that mojo that you got going on there? For example, like when you were talking, it was making me think about Never Split the Difference and like the late night DJ voice, like slowing down. I don't know if you've read that or not.
I have.
But
Awesome,
cool.
awesome.
Okay. Yeah. So I guess how did you train yourself to be
Mm.
approachable and mirroring people and like all that? What sort of resources can people look at?
Yeah, honestly, I don't know if that's just been my style, but I will say that if people want to learn more about like seller financing as a strategy, I do have a free school group where they can watch 20 plus hours of content. In fact, my buddy Ramon Casals and I have done that together. So they could look on Instagram, go to my bio, and have that free access to that.
Hey guys, the tool I've been talking about forever, Co-Living Pro, is now officially live. So some of the biggest problems that I've encountered around co-living are always on the marketing side. So you can think of Co-Living Pro as a marketing software or a tool to help you overcome some of these marketing issues that we all run into in the co-living space. So number one, it helps you determine what to price your room at and then how to change that price over time. And that's actually a free tool. You can go there to colivingpro.io, and there's a little like rentometer type tool where you can punch in an address, punch in a zip, punch in a city, and kind of see what rooms might rent for there. But it does that for you. And number two, historically, for us to keep our rooms operating at full capacity, especially when we're off a pad split, it's meant that we had to post on Zillow, post on Zumper, post on Apartments, post on Roomies, post on all these places. And with just a 5-bedroom house, that's already 20 listings right there, which is a lot of work, a lot of time and effort. So Co-Living Pro helps you solve this. You just make your listing on this one site and it pushes it to Zillow, pushes it to Zumper, and we even support any platform with the manual listing manager. So you can still be on Apartments, still be on Roomies, still be on Pad Split, still be on anything. And it's kind of a wizard that helps you stay organized, your VA stay organized. It shows you what rooms need to be posted where with just quick copy paste prompts. Copy your rent over, copy your description over, boom, you're good to go. And number three, historically, now that you're on all these sites, we always had to hop in daily or at least weekly to keep these listings up at the top, keep the pricing up to date. So Co-Living Pro solves that for you too. It's making those adjustments for you on a daily basis, even an hourly basis, to make sure your listings are updated across your platforms. So you guys know everything I've always done has been free. The community is free. This podcast is free. I'm super proud of that and definitely going to keep doing all that. But this tool is paid, but I feel comfortable doing that because the numbers are honestly pretty insane. So if you go to Co-Living Pro, there is a calculator where you can do this for your own situation. But let's take that example earlier of the 1 5-bedroom property. From that, we estimate you'll make an extra $1,400 a year in extra rent and reduced vacancy. And that is 5x what the tool costs. Let me say that again. This tool produces 5x the return of what it costs. So in this example, that's actually a better return than most co-living properties themselves, being around 15, 16%. So seriously, to me, this is a no-brainer. So head over to colivingpro.io. This is the tool that I built for my own business, and I'm so happy that I can finally share it with you guys. And back to the episode.
So, okay, I guess let's back up a bit. From the co-living perspective, are you able to typically we need bigger houses, right? Are you able to filter for, hey, I need 3,000 or more square feet or whatever it is, give me these homes, and then you're able
Absolutely.
just to call those?
Absolutely. Yeah. There's numerous data platforms where you can really stack the list however you feel it fits inside of your buy box. And then you can just focus on those. Absolutely. And you can mail. I recommend if you're going to do it, then you hit them on all channels. You mail
Yep.
them, you call them. I guess that hits everything. It's just
Knock
mailing,
on,
calling. We don't like to
you
text a
knock on
whole
their
lot.
door,
Yeah,
you
and you can go
email.
door knock, right? If there's driving for dollars is still, I think, a very viable strategy, and I think few people are doing that. You can all of that's, I think, important to hit them and be omnipresent, hit them on all channels.
Right.
Yeah. So in that vein, Robbie, yeah. So kind of like Craig was saying, that there's certain criteria for co-living that are super specific. So we're looking for huge houses, great parking. There's certain criteria that really is a huge limiter on our lead flow, like starts to filter things out super early in the funnel. So when people are thinking about going off market, if we do have a whole team, then great. We can push like a ton of volume through and you will definitely find those deals. It's a probabilities game. But if you are just yourself, there's like a lot of leads you would have to push through. So would you recommend people just like going through that themselves, or at that point they reach out to a wholesaler to kind of cut down on that? Now they can talk to 10 wholesalers and maybe that's a better way for a single operator. What do you think about that?
If we're focusing primarily on off market, is that what you mean, Miller?
Mm-hmm.
Yeah,
Yeah.
I think I'm a wholesaler, right? And I hate to call myself that because I do think it has a negative connotation. I'm just a deal finder. I'm a problem solver. That's the way I look at it. But there's many problem solvers in marketplaces. If you were just to Google buy my home for cash Denver, you're going to get so many different home buying companies, and you can just cold outreach to them and say, look, I'm a buyer. I want to be added to your list. This is my profile of property I'm looking for. They're the ones that are spending the money. They're doing the heavy lifting on sourcing opportunities. And from in my market, I'll tell you, I don't know this would be the case in Denver, but there's properties that aren't as attractive to investors that are inside of that just normal fix and flip profile. Personally, I'm not taking down big properties. I like to be under 2,000 square feet. That's just my buy box. I like to be at the middle to lower end of the price point in the marketplace because there's more buyers. So every investor has a different profile. It may be that there's investors out there that have these companies that don't have somebody that's looking for what the perfect profile property would be for your strategy. So I think that's a great free way to start finding opportunities.
So in the scripting that we did, and I love what you just said, but in the scripting that we did, right, we use the open house as like the warm transition, right? Of, hey, I'm inviting you here. Oh, by the way, I want to buy your house. Let's say you're not a real estate agent and you're not in an open house.
Mm.
I don't want people to not be calling because of
Yeah,
like that
sure.
reason, right?
I'm glad you addressed that. I think realtors, I think it's actually easier for people that are not realtors these days. And hear me out, because I don't know about you, but anytime a realtor reaches out to me, because I own a bunch of property, so people don't connect the dots sometimes that I've got LLCs, right? So many LLCs, and so my name might not even show up on tax records. In fact, it doesn't. So they'll call me, and I get cold called from realtors all the time. It's annoying. So if I'm dealing with just a normal consumer, my guard's down a little
Mm.
bit more, right? So like if you don't have an open house, I think it's even more attractive because I think the collective population, well, they may not look so highly on realtors, unfortunately. I think we do a wonderful job of serving the public. We always have the right intention, but not every realtor's that way. So don't let that stop you from doing outreach. I think it's even more interesting when you have a non-licensed person call, and I'm not telling anybody to practice real estate without a license. Certainly don't broker the deal. But if you're the principal in the transaction, you're the buyer, in other words, you have every right to be able to purchase real estate without having a license. And I think it's more interesting to the seller.
Yeah, I love that. So that's good. That's good. So don't let that be an excuse just because we talked about open houses.
Exactly. Yeah.
One thing that we've been noodling on is you can network with wholesalers. Of course, the wholesaler is going to make their cut, which is good. For us, we're so specific and there's not a ton of buyers out there looking for co-living deals that we can go to the MLS, filter out exactly what we're looking for. There's 2 or 3 houses available, and then we go look at the best of those ones. That's free, right? That takes about 10 minutes of our time and it's free. Is that a better source of deal finding than trying to get these off market deals? Or what would you say?
I would say it depends on what the overall strategy is. For me, I value cash flow the most. I imagine in with your strategy, I can tell you with all transparency, I've not done co-living aside from buying my first house. We may have talked about that off camera that I didn't know I was doing co-living. I had the fraternity of my own living in this house. But my strategy is I want cash flow, but I'm also building net worth simultaneously. And it's very interesting for me to continue to build my net worth because it gives me more options. I could cash out refi, pull proceeds out without having any tax liability. I can get a line of credit on a property and get more leverage while still collecting cash flow. So it gives me more options. All that to say, I want both. And if we can accomplish the same thing and accumulate net worth in doing so, then I think it's just going to make the numbers even more attractive because your basis is going to be so much lower. So what I would do, what I would think to do, not fully knowing the model, is do a BRRRR, rehab it out, cash out, refi, and then implement the strategy. And your basis is so much lower than what I would imagine is a retail price on the open market.
Yeah.
So it should optimize all of the numbers, I would think.
I think it's like we can usually get like pretty good deals on the MLS, right? Going off market, they can make them even better. And then, of course, if you could buy something at a deep discount and renovate, refinance at the right time, all that kind of stuff, for sure. Is that your main strategy, would you say, is BRRRR? Or
I'm not doing a whole lot of single family BRRRRs anymore. I'm focused more on commercial. It is something I'm absolutely looking at. It is the main objective is to own as much real estate as possible. That makes sense. There's never a deal where I'm just buying it for sake of buying it. I don't buy a seller finance deal just because the seller's willing to do a deal with little even to no money down. I want to make money day one. But I would say our primary exit at this moment, just because of how strict my criteria is for me to own something long term, my buy box is so much more narrow than the majority of the opportunities that we get, and we still want to monetize those. So our primary strategy at this point is to source deals and sell them to investors. And then we'll peel off the good ones that fit inside that buy box, and I'll hold some of those, but the more volume for sure on the reselling.
okay, I love it. So when you get a deal, how do you like? I know we talked about you educate the seller a little bit on the seller financing piece. You never mention seller finance. Like, don't mention the terminology that just scares them. But and I noticed you did that. You just explained the feature, didn't put a name to it. How do you know what to come in with? Like, how do you know to give them a 2% interest rate? How do you know?
Yeah.
Right?
Yeah, that's a good question. So what I always tell my team is we never negotiate off of interest rate. We negotiate off of payment. This is the key. Okay. So everybody's fixated on interest rates. And sometimes it's just so ego driven. I got a seller I got off the phone with today. He has to have 7%. Let's do the math on 7%. Here's what it is. If we were coming at 6%, here's what it is. Can you live with this one? Yes. Okay. Then because we came up so much on our price to get him to be open to doing seller financing, we're able to negotiate with him and do a lower interest rate. But the point is this. How do you I think the question, if I'm not mistaken, Craig, is like, how do you structure the deal? How do you know how to structure the deal? It's all based on math, never assumptions. So we math it out. We find out based on what a long-term lease rate would be. We're always underwriting strictly off of long-term. We don't underwrite on what short-term or mid-term can bring. As beautiful as your strategy is, it wouldn't make me feel comfortable as the sole source of income to underwrite it on co-living, just because I want to know under the hardest of times. I want to stress test this deal. Like, worst case scenario, what's this bringing in? $2,000 a month. Okay, $2,000 a month is what it brings in. I'm going to have $1,500 in insurance. I have $3,000 in annual property taxes. I'm going to have $2,000 in vacancy. I'm going to have another $3,000 in repairs and maintenance. It leaves me with this much net operating income. And so then what we do is we find out what is a reasonable return on investment that we would like to make. For me, I need to be in the double digits for sure. So I'm looking for minimum with the abundance of opportunities that my team creates. I need higher yield for me to place capital and make sense of it. Otherwise, it's an opportunity cost for me to go plug something in and get a 5-6% return when I can do that with no risk or no noise doing something else. So I'm looking for typically minimum 15%. So then it's just a cash on cash return. And if you want to get really fancy, you can look at IRR. I generally just base my decisions off of cash on cash. So based on the down payment that a seller wants and what we can pay, and what we think that we can agree to in terms of monthly payment, we're going to forecast what we think the total net cash flow will be. We annualize it, and then we run it against how much cash total cash we're going to have into the project, down payment plus renovation. And are we equal to 15% or more day one of owning it? And so that's our buy box right there. There are cases like, would I take a 3% cash on cash on a property that I'm buying at an extreme discount where I'm going to walk into 100,000 of equity? Absolutely. Right. So there are circumstances in which we will bend on our criteria if we're winning somewhere else in the deal.
Right. And I think that's so important is like, you really got to understand all the levers that create the return. So, I mean, price is one of them. And usually and I heard you say this before, either you get your price or you get your terms, right? And you're happy with either one of those things. So if you get your price, great, you're going to walk into 100,000 of equity. If you get your terms, now you're looking for 15% return. I guess my question is, on the price perspective, what's the number? Because then it's not necessarily a return on investment calc, it's a true equity calc. What's your number? Is it 40K? Is it 50K?
Yeah, it's really dependent on a return on energy, right? So that's the metric a lot of people don't think about. Like, how much effort is this going to require to be able to extract out this value that we've added to the property? Typically, I'm doing just light cosmetic rehab. So I'm past the point of doing full guts. I've done it. Just I'm not interested in doing it. So many unpredictable things. So we try to control the controllables as best we can by doing rehabs that are a little bit more predictable. And at that point, it's not as much of a cash on cash return. It's how fast can we get in and out of a property and what could be the gross yield. So, my buy box, again, like I want to be in my marketplace, medium sale price is on just under 400K. So I like to be at like 350K or under because it just moves faster, right? So if I can get into a project, like a typical bread and butter play for me is I'm buying something at 200, I'm throwing 30 to 40,000 tops into it. And then I'm reselling with like I'd probably be at like the mid 300s, 350 on something like that. And we're factoring in, I'm paying myself as a realtor commissions. So I build that in. I pay another buyer broker compensation in there too. Minimum for me, if I can get in and out of a project for 3-4 weeks, that's like our timeline that we shoot for, then I would like to net about minimum 40 to 45,000. And sometimes we do better and sometimes it's darn near close, but it's a return on energy metric, if that makes sense. If I can net 40 grand on a month's worth of work and I can do a handful of those, that's interesting for me.
Yeah, I get that. So someone's just starting out, right? Like, you've built this behemoth of an organization that sources these deals, but what would you say is someone who is unlicensed, step one towards getting some off-market deals?
Yeah, number one, just let everybody know what you're looking for. We heard the term, don't be a secret agent. Don't be a secret investor. It's amazing the tools that we have at our disposal these days. Like when you and I were first starting out, man, yeah, social media was around, but like I wasn't utilizing it. I don't know about you, Craig, but now I take the advantage of the opportunity and I let the world know what I'm looking for. So social media is a phenomenal tool. You can just get on there and say, hey, I'm just starting out. I think the world actually loves to see people like they're rooting for the underdog, right? I'm just starting out. Anybody have a property that they might want to sell? Please let me know. I'd like to build my portfolio. So doing some of that, going through MLS and like finding who the top brokers are and take them out. Like nothing is more powerful than being face to face with somebody. Everybody wants to text. Nobody wants to get on the phone. You just build that relationship and get face to face with somebody and say, look, Craig Miller, I'm just starting out, but I see you guys are the guys in this area. I do have some capital. I'm looking for this. I would really be so grateful if you can just let me know if you find something that maybe needs a little bit of work. If you got a seller that would just like it going out without going on the open market, please let me know. And I'm doing that multiple meetings per week, building relationships with brokers. And I'm not stopping with one touch. It's then I'm systematically marketing to the same people that I've been in touch with every few weeks. I think a lot of people go wrong. They just do one touch and that's it. It's not enough. They'll
Mm-hmm.
forget. So I think some of that would work. And then doing some door knocking. Like I still drive by houses and buildings. I'm like, oh my God, I need to own that. Find out the address and jot it down, cold call, mail them. And it's a multi-year process. In some cases, I'm locking deals up, guys, that I've been in touch with sellers on for years. So if we just start out by changing the mindset that this is a long game, you're going to get some early luck if you have enough volume because volume negates luck, but be in this for the long haul.
Yeah. Yeah. If you are in real estate to get rich quick, you are in the wrong game. There is no get rich. There's nothing in life that is truly get rich quick that doesn't have some sort of aha or gotcha to it. So
Yeah, I totally
just
agree.
beware of any of that.
Yeah, cool. Hey, we've talked a lot about seller finance, and so it seems like that's a strategy that you guys lean on pretty hard. But I feel like the off market space, newer investors out there, I'm sure they feel like me fly fishing right now. So I'm getting better at fly fishing and kind of getting into the sport. And I have this box of all these flies, like lures, and I'm like, dang, which one do I use? In the off market space, I hear
Yeah.
about seller finance, assumable, VA assumable, sub two. Pace Morby talks about all these other strategies too, like wraps and like all kinds of things. So when people are sifting through all of those, are there any that you feel like are most important to learn first? And like, how do you know which tool to pull out of your belt? It's probably not always seller finance, right?
So I'll tell you this. What our typical process is we start by understanding what it is that they're trying to accomplish. A lot of the times the people reach out to us because we're at a point right now where it's all inbound. So it's not, we don't cold
Mm.
call anymore. We're paying for marketing. The marketing generates a phone call or a hand raiser, and then we reach out, right? Depending on the type of marketing. It's inbound opportunities. So we talk to them, and if they're interested, they're typically reaching out to us in the first place because we have some marketing message that says, we will give you a cash offer. We live in the society, the era of Amazon. You buy it today, it's at your doorstep between 2 and 4. Literally, I've got new swim trunks coming this afternoon, and I bought it this morning. So it's wild, and everybody, they want convenience. So cash, I think, speaks to that. With that said, a lot of people that reach out to us, they don't come out and say, hey, what's the best seller financing deal you can give me? How can I be the bank? They don't think about this. They want the cash. Okay, so when we make the offer, we typically start with the cash number. And we do that for a couple reasons. The main reason is if we can, and this is a sales tactic, but genuinely, like we're underwriting properties and we're ready to pull the trigger at this price. But if you start with the cash number and anchor them in at a lower number, and then we started at 150, but we could end up giving them their price of 250 by utilizing a different strategy, then that's phenomenal. They feel like they're winning, and they truly are. They're making so much more money. How do you know which one to do? It just typically starts by understanding what their interests are. A lot of people that we deal with are not wanting to get held into a long-term contract, but they're a seller. When we do some commercial real estate, it's the opposite. These folks tend to be a little bit more sophisticated. They like the deal structure. There's tax advantages of doing it that way. They're more understanding of it. We see in our commercial acquisitions, that's their primary interest in transacting. So I think if this is sounding very obscure to people, that I don't want people to getting caught up on having to be the expert in creative finance, of sub two and assumable. And those are all things that come with experience. But very first thing we need to do is talk to a human being who wants to sell. And if you don't know exactly what to do, you just think the most genuine thing you can do and to a seller is just help them solve a problem and say, look, I'm new. I don't know everything yet. I would just love it if we can work something out that works for both of us. And I think that can be a good way to communicate. I'm afraid of your audience feeling like they have to be the expert before they can jump in. You just got to take action and learn through experience.
Yeah. Do you think people could, so if they're new, approach a phone call, kind of get some of the details from the seller, and then is there an opportunity to step out of that phone call and really sit down and think about the different scenarios? Maybe they have notes on these different strategies or whatever, or is it like, hey, you got to be quick on the phone ASAP. You got to know what to do.
I'm so glad that you mentioned that. We never close somebody on the first call. It's not a first call close. This is just our methodology that we've adopted. So we have a phone call with somebody, we find out, are they definitely ready to sell? That's one of the first few questions in our intro. If the answer is yes, we move forward. If there's uncertainty or non-committal language, we address it. We're only wanting them to talk to people that are ready to make a decision today. And we give them permission to tell us that they're not ready or they don't want to sell. That's totally fine. So we take the whole normal sales cycle, the normal sales approach out of it. We're not trying to get them to do anything. We just want to ask a series of questions that allows them to arrive at a place where they feel this is something they want to do. Right. So once we gather information, we say, you know what, I'm going to go ahead and do some numbers and we'll give you a call back. Get off the phone. So there's never any pressure for my sales team to just one call close them. Take a step back because it all comes to me anyway. I have to run through all the numbers and I give them the offer. Even if you're a solo operator, totally recommend that you don't feel obligated to do the deal on the first call. I think there's just good rapport building that happens in a series of phone calls. Just the act of saying, "Oh, hey, Sally, it's me again. How are you?" There's relationships being built in multiple phone calls, right? Mm-hmm. So I think that's the way that we do it and how we would recommend it.
Awesome, man. I love it, man. There's so much that you've just unveiled to us in this episode of just not being afraid to go right to seller, talk to them. They're just a person, build a relationship. Don't try to sell them on the first thing. Just be a problem solver and come off as like a genuine human that wants to help them. And I think you get a lot more opportunities than if you just try to sell them on that first call. Robbie, I think we're gonna head into the final part of the show here. But before we do, any parting words of wisdom for all the listeners?
I'm still looking for the wisdom, man. I even though I'm in the trenches doing it, I find myself just always trying to get better at things. And I would just tell people, going back to what we said, like I encounter so many people that are just afraid to start because they don't know what the first step is and how to have conversations. But there's nothing wrong that you can say to a seller who truly wants to sell. You're not going to mess it up if they truly want to sell. So I really recommend we just jump in, take massive action, and build some confidence in your ability to follow through with your intentions. I think the confidence will come with just you following the promise that you make to yourself that you're going to do it. And I think the rest will fall into place.
Yeah. One thing that like we tell agents on our team to do is we do these challenges every year where you got to make like 5,000 calls in 2 months or do 50 open houses in 2 months. And it's challenging, it's difficult, but by the end of that challenge, the 5,000 calls in 2 months becomes a habit. And you're no longer afraid to pick up the phone after you've done 5,000 calls. And you're certainly no longer afraid to talk to people in open houses if you helped 50 of them. And so that initial feeling goes away. And then over the course of 2 months, it's become a habit. And that can then just go into, that becomes your everyday. So just based on what you said, Robbie, it just triggered that in me to let you guys, if you need a plan of action, take the next 2 months, 60 days, and go call 100 people every day. Your day is not, and whether 100 people hang up on you, no one picks up, whatever, like just call 100 people and guaranteed you'll have something come from that after you've called 5,000 or 6,000 of them.
Yeah. Yeah. And Craig mentioned 5,000 calls, right? So definitely a big number, but I'll say that fear goes away so quick, or at least in my experience. When I was in college, I dabbled in some wholesaling when I didn't have cash and was just kind of getting into the real estate game a little bit. And I still remember I recorded this first call. If I find it, we can play it here. I'll have to go search a little bit, but I recorded the first call, like literally shaky voice, like terrible execution. But by the third person that picked up, it was like literally that quick. Shakiness gone. I still didn't know exactly what to say, but so much calmer by the third call. The first one is the big hurdle to get over. And it's so much easier, so much faster after that.
Yeah, yeah. Robbie, you're like smooth as silk phone, right? As we heard on the role play, right? But I bet you that wasn't your first time having that conversation. It's probably like your 10,000th time having that conversation,
Yeah,
right?
I
You
had
could,
a lot of conversations for
yeah,
sure.
you could have that conversation while you're brushing your teeth, while you're watching a movie, like that. Like you don't need to think about it, right?
Yeah, I have the conversation with my wife, and she's still telling me, "I don't want to hear about your real estate anymore." Okay.
Just, what do you mean you're only going to give me 20,000 down?
Yeah.
Yeah,
1.5. What are you talking about?
yeah. Awesome, man. Let's get into Miller. You ready?
Yeah, let's do it.
It's time
the
for the big
big
three.
three.
Boom. Super
Boom.
coordinated.
Yes, that might be our worst coordination, actually. I think I'm lagging a little bit on my side. For everyone out there, it's a tech issue.
Yeah, we'll blame it on the tech. That's easy.
Yeah.
Or Miller's just a little slow.
A little slow, maybe.
Also,
Okay.
right. All right. What's one tool or system you use in your business that you cannot live without?
I would say, I don't know if CRM would qualify, but
Totally.
yeah, absolutely. You got to stay organized. And that's the first thing we talk to any broker we onboard. You'd be amazed. I'm sure you guys have experienced this. Like people are doing business without being 100% locked into some type of system that helps them keep track of all of their effort, right? So our CRM for sure, because it gives us oversight and visibility, a dashboard on performance of the team and for ourselves as individuals.
Can we ask
Awesome.
what CRM you're using?
Right now, I've got two separate CRMs, one for each business. So in our investment business, it's Podio. And then in retail, we use Follow Boss.
Awesome. Cool. Question number 2. This is story time here. What's one transaction that's gone horribly wrong? Or maybe it was a phone call, maybe it actually was a full transaction, and what was your learning lesson there?
Ooh, I've done a lot of transactions. Oh, here's an interesting one. Can there be a good ending to it, or does it have to
Okay,
be
this
just
is
like
technically a horror story, but yes.
Okay.
As long as it's interesting, as long as the ride's good.
So I bought this, we contracted this there was a home. There was a very dilapidated home on this land. I was underwriting it off of land value. The home is just not even salvageable. There's homeless people getting in there, and the place is completely thrashed. So we underwrote it as land, contracted it. It was just a very difficult transaction to get to the closing table. We got it done in several months. Closed on it. This was in November of 24, November of 24. Closed on it. I go ahead and find a demolition contractor. We demo the property, the land, the dwelling, the improvement. It's just completely gone because it wasn't salvageable. This was in January. Spent about $16,000 doing that. Then I get a call from a title attorney with the title company that we closed with, and they said, "Hey, it looks like the property was actually sold at a tax lien sale, and I guess they've just recorded the lien, so you're no longer the owner of the property." So, long story short, they had purchased the property from a tax sale. They purchased the lien rather from the tax sale, and I had already closed on it and spent an additional $16,000 on demolition. I luckily have title insurance on this property, right? So worst case scenario, they're going to cover the total policy amount, which was the purchase price. So I could be out the demolition cost of 16 grand. But the good thing was that I was able to hire counsel through the title company. They hired counsel, and they were able to claw back the sale because they didn't record until after we did, even though the tax sale could supersede an existing sale. So it was about a 8 to 9 month period of time where I didn't know if I was going to be able to get this property back, and that would have been the worst deal that I've done. On wood, that there hasn't been anything that I've really had bad outcome on. But we were able to salvage it, demoed the house, and we ended up renting the land out to a mobile home owner, and they put their mobile home on the property, and they're just paying us lot rent. So it's great because it's truly a little parking lot for them, and we are not responsible for repairs and maintenance on this property, and it turned out to be a good deal.
Awesome.
Nice.
Yeah, there's rarely a transaction that is totally smooth. So always bumps along the way.
Yeah, and love the fact that you're able to solve those problems.
Yeah.
Okay, other than this podcast and our community, where are you learning the most about usually the question is co-living, but we'll call it real estate today. What's your main source of education?
Definitely podcasts. A lot of the strategies that I utilize today, like I remember the day when I figured out Burr on Bigger Pockets. I was like, wait a second.
Mm-hmm.
I was doing it the whole time, but I didn't realize there was a delayed financing option. That's when things started to really speed up, where we could actually do the refinance without having the 6 months of seasoning. There's some limits to the loan amount by doing that, but I could recapitalize a lot faster. And so once I heard this guest on that podcast do that, this was like in 2015, I was off to the races and I just started growing much faster. So definitely podcast, Bigger Pockets has been a big one for several years. And then most recently, I listened to Ken McElroy's podcast. I love the Real Estate Disruptors with Steve Trang. I'm just a real estate nerd.
Yeah.
All I do is real estate, and my wife's just sick of it. She's just sick of me talking about real estate.
Yeah, it's passionate. And then I bet you she doesn't know how much you talk about her at work, though. You talk about real estate.
That's right, Craig.
Yeah, so that's what you got to say. Yeah. Ask my
Send her this
coworker.
episode.
Yes, exactly.
Yeah.
Awesome. Well, cool, Robbie. Let's get you out of here. So where can listeners find you? You mentioned that you have potentially a school group and all that kind of stuff. Where can people find you and learn more about you?
Yeah, probably the best place to find me is on Instagram, Robbie Faith Real Estate. There's an E at the end of Faith on that bio. You can see the link to my school group. And that's probably the best place to find me, actually. Yeah.
Love it, man. Cool. Robbie, thank you so much for coming on the show. Thanks so much for sharing all the stuff that you know. Super appreciate you, bro.
Likewise, gentlemen. It was great chatting with you. I appreciate your time.
Awesome. We'll talk soon, man.
Talk soon.
See ya.
And that was Robbie Faith. What do you think about Robbie Miller?
Yeah, I think that was great. Kind of like we mentioned in the beginning, this is a shakeup. I think this is probably our first acquisitions kind of focused episode. And mostly we're talking about ops. So usually this is my world and I get to kind of hop in and kind of know what's going on. I know which questions to ask and all that. But I feel like I kind of got to go through this podcast just like a lot of you listeners out there. I don't know much about seller finance. I don't know much about those different strategies, how to approach these conversations with off-market sellers. So I learned a ton here. But Craig, this is kind of more of your wheelhouse.
Yeah, I was in my comfort zone on this one for sure, and definitely in my place of highest and best interest. And yeah, I love how, and we teach this a lot to our team too, of like when you approach a seller, especially a residential seller, you don't want to make them feel like a transaction. You want to be building a relationship with them. So the relationship comes off a long way. You can tell that Robbie is a pretty genuine guy and he's just trying to like help solve a problem for them. And so that's really what we're here to do. And you're not mentioning, oh, will you seller finance it? Or, oh, will you carry paper? You're not saying that. On a commercial deal, yes, 100%. You want to sound like you know what you're talking about. Residential, you explain it, you don't say it. And that builds the trust. So yeah, man, I really love Robbie. I love what he's doing and I love how he's able to get really good deals. And I'm sure he's built a lot of wealth because of it.
Cool. Awesome. Before we wrap up, Craig, if you guys are listening to this and you do want to keep learning more about co-living, structuring deals, operations, going off market, all this kind of stuff, you guys should join the co-living community on Facebook, 100% free. We have 1,500 or so people in there. And as of today, we're dropping a post in there. Would love to get you guys engagement. Just so this is something we're going to start doing so that we can really capture these podcasts, get the brain juices flowing, really start taking action on what you guys are learning. We're going to start making a post every week that's related to the podcast so we can all hop in and really so it can feel like a community and not just me and Craig teaching you guys. So we posted today, what part of your real estate business are you trying to strengthen the most right now? So I would love to hear you guys answer that and we'll be in there with you guys in the comment section. Cool. All right, Craig, are you ready to get out of here?
Sure am.
All righty. I am Miller McSwain.
I'm Craig Hurlop.
And I'm going first this time, so I don't know how to end these things, but let's get out of here.
This is why he doesn't end things first, is he's a little awkward turtle. So
Yeah,
we'll see you guys next
turtle.
week.
All right. See you guys.
See ya.